Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope you are able to hear me. Let me display the PowerPoint presentation. It is Asian session live market analysis on October 19th between 5 and 5:30 GMT. So we will be doing a simple market tracking technique using the live market code page. I'll link for the same. You can open it in a browser and view where the market is. So in the live market code page, once you open it, you will be able to see the currency symbols in the first column, then the bid and the ask in the second and the third column. Then you find intraday low and high set initially during the Asian session or being displayed. Then followed by that, the net change from that of the previous day close. Followed by that, the percentage terms, which is not very important. Then you come across the GMT time. It is better to track the forex market using the GMT time frame, irrespective of the country you belong to, for the simple reason the market is of 24 hours time frame, and you will be in a position to understand how the market is being split into three different sessions, namely the Japanese session, European session, and US session. Or you can call it a session 1, session 2, session 3, and in between you come across the gap time. So if you understand the market in terms of the GMT time frame, then you can see how exactly the players are making the moves in the market, and that will give us the indication what will be the next possible move. So let us analyze the market for the Asian session. So on Friday, you know that there was a quick drop during the US session, and subsequently many would have thought that it is going to, Euro and GBP are going to drop further. But subsequently, when the buy orders were not available at the lower levels, the players slowly firmed up and they bought all the selling and induced the short covering for the traders towards the close of the week. Then subsequently you find that their intention is released or revealed. You find the net change in the case of Euro is about 23 pips negative, and in the case of GBP is about 30 pips negative, and also in the case of USDN about 22 pips negative. So as I explained during the earlier Asian session webinars, that whenever you come across the net change negative, that means they have opened it or they are currently keeping the market at a lower level from that of the previous day close. And another important thing is Euro and GBP are showing the net change negative, and USDN is also showing net change negative, and that implies that they wanted to do contrarian moves to start with. That is, with regard to some pairs, USD weakening move like Euro and GBP, and in the case of USDN, USD strengthening move. So that sort of contrarian moves, when they make, you will find the impact of that with regard to the respective crosses. And if you see Euro Yen, the net change is negative, and GBP Yen, the net change is negative. So this is how they make the moves in different time frames in the market, and we need to understand, okay, what is going to be the next type of move they wanted to do. Accordingly, we can plan and take our trading decisions. Now, Euro has got a net change of 23 pips negative, and GBP has got a net change of 29 pips negative. Then USDN has got a net change of 28 pips negative. You can open it you can view it in the live market quote page, which may not be available here. Then CHF is showing a net change of 17 pips positive. When Euro is corrected about 23 pips, CHF has raised only about 17 pips. So that indicates that they wanted to keep USD CHF lower in order to make a dip in the case of Euro CHF cross. Then in the case of Australian dollar, the net change is 17 pips positive, and Canadian dollar net change is 15 pips positive, again which is indicating that Canadian dollar is making USD weakening move and Australian dollar is making USD strengthening move. It is a contrarian move. So when they make both the commodity pairs, the net change positive. That means they wanted to make contrarian moves in order to handle the crosses to start with for the week beginning. So let us now go into that of the forecast for the day. So during the Japanese session, the market is expected to make swing moves between the high and the low. And you would have noticed that there was a very quick drop during the start of the Japanese session or the Asian session. And subsequently they have firmed up, but they have not cut the high. And the high was formed initially and subsequently they made a quick drop in order to fill all the pending orders, and subsequently they have firmed up for the traders to take buy positions, and subsequently they will drop. So this is what they do every time. We need to understand that the players try to accumulate lower level buy positions and try to build higher level sell positions. For that they will make initially the swings during the start of the week. Then during the European session, swing and drops are expected. So there will be a nominal swing to start with during the gap time and the start of the European session, and quickly they will again drop and go towards the low set for the day. Then from that of the mid-European session, volatile moves are expected till close of the European session. Volatile move refers to as the up and down quick moves. The up and down quick moves could be done with the help of rumors or with the help of the data release or some expectations released in the media, etc. With the help of that, they will make quick rise and the quick drop in order to hit either way the stops. So during that time, they could come closer to that of the high or make an upward stop and above that of the high, and subsequently swing and slide during the US session. So for the week beginning, we will come across basically a volatile move, and during that process, they have already done a downward stop and to start with. They have cut the low which are set on Friday in the case of Euro, and subsequently they will make a rise and try to hit the high and hit the stops above that of the high which are placed, and subsequently drop during the US session. So I'll be posting this particular forecast in the market reading blog in FX Street, and you can just review it from time to time and also give the dates there. So in order to understand the market better, let us take up the intraday initial highs and lows set during the Asian session. So normally between 2:30 and 3:30 GMT, they set the high and the low in the 6 pairs, the 4 majors, Euro, GBP, USD, Yen and CHF, and also the 2 commodity pairs, USD, CAD and Australian dollar. And with the help of making the initial and the highs and the lows, they are able to make specific moves. And with the help of the specific moves, they are able to identify where the stops are placed and where they are to be moved, and either in the majors or in the crosses, the stops are placed on the upside or on the downside. Accordingly, from time to time, they shift the focus. So this is what you come across in the market, especially during the start of the session and at the end of the session. They will be focusing more on the majors, and during the mid-session, they will be focusing on that of the crosses. So now we are in the mid-Japanese session, otherwise Asian session, and during this time, you find the crosses are being handled, and if you see Euro GBP, the high is 0.9147, the low is 0.9100, and the market is closer to that of the low, 0.9111. So this is how they make the swings up and down moves, and they handle the crosses, and in another 30 minutes or so, you will find that in the case of Euro GBP, they will cut the low. Then you will be able to understand, okay, during the mid-sessions, mid-Japanese session, mid-European session, and mid-US sessions, they will be handling the crosses. And during the start, 1.5 hours from the start of the session, 1.5 hours towards close of the session, they will be handling the majors. So when they are making contrarian moves, understand that they are handling cross. So you have seen the confirmation with regard to the contrary moves with regard to Euro, GBP and USD Yen. And also in the case of Australian dollar and Canadian dollar, both are showing the net change positive. Then with regard to Euro, the low is 1.4828, which is lower than that of Friday low, 1.4840. And the high is 1.4919, which is lower low and lower high. And you will find that they may not make a big upward stop and above that, probably about 5 to 10 pips above that, and subsequently make the drop. In the case of GBP, you know that it was appearing like a very weak currency last week to start with, and everybody was telling that there is a possibility that GBP could go below that of 1.57, and that was expected by many people. But you know that the players were buying at those levels and they quickly rised and reversed Euro GBP. So when everybody thought that Euro GBP could go to parity and things like that, they totally reversed it and made the traders to get struck with a higher level long positions. So this is how they induce the currencies to show the weakness or the strength. They are not the real strength or the weaknesses of the respective currencies. So you have to understand that the currencies are non-living entities and they are to be induced to make the moves. So if you try to use the terminologies that euro looks very heavy, it may not rise, or euro looks very strong, it may not drop and things like that, you will be developing an emotional setback that it'll appear to you that euro is not going to correct, and a small correction you will try to buy, and subsequently you realize that you bought it at the almost closer to that of the high set for the season. So this sort of emotional approach to that of the market will invariably lead to that of the wrong decisions with regard to trading. So as far as traders are concerned, what we are supposed to do, we have to find whether the market is closer to that of the high or closer to that of the low. When the high has not been cut for more than 30 minutes of your observation, market is closer to that of the high, you try to take a sell position. To limit the risk, use about 30 to 40 pips hedging. If the hedging facility is not available, use the stop. So restrict your risk by using the stop or the hedging order. If you are able to use the hedging order, you will be holding in case if the hedging is being filled, hedging order is being filled, then you will have a sell position at a lower level and a buy position at a higher level. So the positions are not closed. So you will be able to review, depending upon the volatility of the market, whether to hold the buy position or the sell positions. Thereby you will be able to maximize the profit by accepting a loss in one of the unfavorable positions. So that sort of facility or the comfort will be given if you use hedging. If you are not in a position to use hedging in certain platforms, they are not allowed, then in that case better use the stop. And in case if you are not willing to use the stop, then at least hedge it with the respective currency pair. In case you have got a sell position in the case of Euro USD, then try to use a currency pair wherein Euro is a numerator. So the other currency pair wherein the Euro is a numerator could be Euro GBP. So if you try to use Euro GBP as a hedging instrument for a buy or a sell position in Euro, then you will be able to do well, or your usable margin will not get eroded when the market moves against you. The basic idea of using hedging is to limit the risk and should not allow a free erosion of the usable margin when the market goes against us. That is the only objective. So we are using the hedging only to limit the risk to start. Then in the case of GBP, you find 1.6282 is the low. Currently the market is trading around 1.6317 and 1.6368 or 69 is the high set, and you find that the high is quite far away. And the net change in the case of GBP is 38 pips. Net change in the case of Euro is 23 pips. So now you can understand that they wanted to dip GBP more and rise Euro GBP to start with. The net change in the case of Euro GBP has become positive and it is 7 pips. So probably they wanted to make a brief upward stop and before making further drop in the case of Euro GBP. So this is how from time to time you have to review by relating the net change of the majors to that of the corresponding currency pair. And in case if you want to do a sell and buy trade in the case of Euro GBP, how you have to take a decision. Now, you find that Euro has come closer to that of the high, has not cut the high. GBP has come closer to that of the low and not cut the low. And Euro GBP has come closer to that of the high and not cut the high in your 30 minutes of observation during the mid session. Then try to take a sell position. You will find that you are not being stopped out. So this sort of watching the net change and also the price action, you can easily take a decision rather than applying various type of statistical analysis in the different currency pairs. Now, if you try to apply the statistical analysis with regard to the different currency pairs, you will find that Euro and GBP are showing the USD gaining move. And as far as Euro GBP is concerned, you will find that neither it is USD gaining nor it is USD weakening. But you will find that Euro is gaining a bit when compared to that of GBP. But both are in net change negative. But if you try to draw the channel, you will find that the channel can go indefinitely upward. And there comes an important factor with regard to the chart study, which is not available, namely the time frame. When exactly it is going to drop? When exactly it is going to make a breakout? So, in order to understand the time frames associated with that of the market moves only, I developed this algorithm with which I am able to give the expected market moves. Now, in the case of CHF, you find again it has made an initial drop quickly and 1.0159 becomes the low and 1.0227 is the high. And if you see that it is holding around the middle level, 1.0193, 1.0196 area, and it is expected to cross 1.02 area. Once it crosses 1.0250, then you will find the rise will become very significant. And in the case of USD, you know that last week it was trading around 88 to 89 area, and everybody was thinking that carry trade is going on with regard to USD and things like that. Everybody finds that yen is the safest currency when compared to that of US dollar in a situation like risk aversion, etc. But subsequently they made a quick drop, and you know the GBP yen suffered nearly about 400 pips on that particular day, and it dropped to that level of 139, and also GBP came to that level of 1.57. Both were making contrarian moves in a very extensive way and made all downward stop, and all the way they gained back. And you find that currently GBP yen is 148.16 and the high is 149.11. Still the net change is negative nominally, and you find that yen, they can make one-sided moves. So if you want to trade in USD yen, you need to understand which way they are going to make the move and similarly take the trading decisions. So it is independent of the Euro and GBP, and if Euro and GBP are showing the USD gaining or USD positive move, it doesn't mean that USD yen need to make similar moves. Many occasions they will make the similar moves, like all currencies may show USD weakening or USD strengthening move. At the same time, you will come across suddenly the market sentiment will be reversed, and you may find that USD yen started gaining when Euro and GBP are dropping. They are all mainly the actions in order to handle the respective crosses, where many traders take aggressive positions because they are able to get the interest rate. So in the case of yen crosses, many think that buy and sell is a very safe trade because we are getting the interest to take a buy positions, but they will show about 300-400 pips loss. Then you may have to take a decision on that. Here again, if you use the hedging, and hedging in the case of crosses should be used for more than 50 pips because the volatility is very high and they can make very quick moves, like the double edge effect. By dropping GBP 25 pips, by dropping USD yen 25 pips, they can drop GBP yen 50 pips. So that sort of double-edged effects could be seen in the case of crosses. So accordingly, you have to take decisions on trading. And as far as Australian dollar is concerned, 0.9114 is the low and 0.9187 is the high, and market is swinging in between. It is closer to the high. The net change is about 19 pips positive, and this is mainly to handle the crosses, making a small dip in the case of euro and small dip in the case of GBP and rising Australian dollar, thereby the crosses of the Australian dollar with the majors like euro and GBP, they will firm up. So on Friday, you would have noticed during the euro session that Australian dollar was the first one to correct, and followed by that euro and GBP. Now you find that Australian dollar is firming up. This is mainly to handle the crosses, nothing to do with the respective strength of the commodity pair. And in the case of USD CAD, you find 1.0365 is the low, 1.0420 is the high, and currently the market is in the middle level, 1.037781, and they will slowly firm up Canadian dollar and during USD CAD, and during the European session you will come across the USD gaining moves will be seen. And with regard to the forecast for rest of the week, tomorrow 20th you will come across till midweek. Tomorrow 20th and 21st there will be more up and down volatile moves in the market, and slowly you will find that levels are getting reduced and more lower lows and more lower highs will be formed during that. And on Thursday you will come across a very volatile move in the market, and on Friday you will find USD gain moves happening in a very significant way. Then the next week followed by that is the last week of the month. You will find the market flare up in a very big way, upward stop, and probably it will try to reach again the high set for that particular season. Then followed by that a big drop, and the drop will continue during the month of November. Thereby you will find more and more of USD gaining moves will be seen in the case during the month of November. So let me just minimize the PowerPoint presentation and take up the questions which are asked here. Probably all of you might be aware that the webinar is being recorded, and those who are not able to come alive for the webinar because of the time frames they live, probably they will be benefited by going through the webinar in the recorded format. And also the same content will be available in a brief form in the blog, and you can continue to ask the questions in the blog in relation to the webinar. Then there again I'll be able to answer to those questions. Okay, there are some personal questions before that. Okay, since the webinar is being recorded, could you show the live market quote page in your camera? See, the live market quote page is actually running on applets, and I noticed earlier which is not being displayed. I can show the live market quote page here. If you are able to see that, fine. Let me. Are you able to see the live market quote page? I'm not very sure, because the applet does not get displayed. Oh, you are able to see, fine. Fine. Then you can make use of it. I'll just go through the questions so that you'll be able to understand. Okay, Japanese session Smith has got a question. Japanese session drop is false move for week beginning. See, it is not actually a false move. What the players do is, on Friday they firmed up Euro and GBP towards close in order to induce the short covering, and thereby those who have gone short probably placed some improved buy orders. Say suppose for example in the case of Euro GBP, earlier people would have kept a buy order at 1.4750 and they would have thought that okay, it may not reach, then probably keep it around 1.4850. Then what happens during the start of the week itself, they make a very quick drop and fill all the buy orders. Thereby they are able to get reduced with regard to their buy positions. And ultimately the players take positions against the traders, and the positions are to be closed only in the market. Nowhere else they can close the positions. So obviously they need to make such moves in the market. Okay, it is not actually the false move. You will find that European session, Asian session or a Japanese session, they made an initial drop and they made a form of move in order to create a bullish feel in the market, and subsequently they are expected to make drop during the European session. So when they go closer to the low again, then it is not considered as a false move. Okay. In monthly moves, Santosh has got a question. In monthly moves, do you see GBP USD weakening more by end of October? Yeah, end of October, Euro and GBP are expected to lose. And next month, you will find considerably they will lose their strength. Yeah, I will show the forecast slide again, please. What is the best level to go long on GBP or a position trade? See, there is a very good level available in GBP 1.457 area. There is a good level to go long in the case of GBP. And again, they will come to about 1.58 or 59 area. At that time, you can go long for position trading. But current levels are not advisable for position trading. Okay, what is the prospect for GBP now after having risen considerably? See, GBP has risen from 1.57 to 1.63 area or almost to 1.64 area. It doesn't mean that it has lost the momentum or it has gained levels and it may not drop and things like that. See, you know very well in the month of August they raised it to 1.70 and subsequently made a drop to 1.57. So it is a question of rise and drop in the market, nothing to do with regard to the bullish and the bearish conditions. Depending upon the market traders' positions, the players continue to make the moves, and probably some might gain significance in that. Probably you may see that the statements are gaining importance because of that GBP has corrected and things like that. And what happened to the statement? It is being discounted. I do not want to mention the names here. Regarding USD-Yen, what kind of moves do you expect in this week? Should it be a downward move below 90? Yeah, there will be an initial downward move to that level of to the level of 89.70 and things like that, and subsequently you will find that it could cross above 92. If one had a short trade in Euro USD and long in Euro GBP on Friday, the hedge would not have been worked to the benefit of the traders. So there is limitations of using crosses. Yes, obviously there is a limitation of using the crosses for hedging. It may not be a very effective hedging, but the usable margin will not erode totally. That is the only advantage of that. And many were using GBP for hedging against Euro. You know that how contrarian moves are happening in the case of Euro and GBP. So it is not an ideal pair to hedge. Okay, can you explain 30 minutes 2 hours rule? Rational against. Okay. Does it apply to the opening hour mid-session? Okay. What is 30 minutes rule? Whenever a move happens in the market and you have to watch it for 30 minutes, And it is like our emotions. So suppose you get very angry and your anger cannot sustain for a long time. You might be shouting against somebody a maximum period of 30 minutes. Beyond that, the anger will subside. And that is because of our endocrine system. And in our body, and when you get angry, the adrenaline is being secreted and it gets dissipated in the blood or diluted. Then afterwards, the muscles are not being activated and you don't show your anger anymore. So same way, the panicness. Suppose if they cut the psychological level 1.49 and show above, immediately you develop a panicness. Oh God, it has gone above 1.49 again. Then probably it can rise above Friday high. That is how you will think. But when you watch the quote or when you watch the chart and things like that, it is not going up further by 10, 20 pips. Then obviously you find your fear subsides. Then you don't feel like going and buying at the highest level or do a short covering there. So this sort of emotions can be triggered only for less than 30 minutes. And for that the players make an upward stop and quickly and drop below that of the initial high in less than 30 minutes. Then it is referred as a stop. Now you would have seen that Euro this briefly showed about 1.49 and immediately made a dip. And still then it changes negative. So this sort of moves, you find an interesting thing, capitalizing the emotional status of the traders. So that players cannot come through the computer and catch your hand and say that come on buy euro. They can only trigger your emotions and induce you to do such trades. And that is why you find the 30-minute rule work very well. Beyond 30 minutes, you become habituated. In case if they rise above that of the high and hold above that of the high for more than 30 minutes, then you find, okay, they are not going to drop. You are able to make a judgment on that. That is why I always say, whenever you open the trading platform, immediately do not jump into that of the trade. Watch the market for 30 minutes. Then you will be able to cool down your emotions and accordingly you will make sensible trading decisions. The second one is 2 hours. In case if they make an extended stop end and in the first stop end they will make the rise in the market in order to trigger the emotions of the traders, and subsequently you find that the traders try to do the short covering. That will take another 30 minutes. Then the last 30 minutes, some traders might try to do a breakout trade, try to buy at near the high, following the chart, thinking that it can make further rise. And in order to limit such decisions, only I said earlier also that you watch the net change. If they are already done a net change of about 150 pips in the case of euro, or 250 pips in the case of GBP, or 200 pips in the rest of the majors, then there is no need for you to do a breakout trade because further rise above that is highly limited. So that way the net change helps you to take a trading decision. And simply by looking at the chart, you will not be taking into consideration that let me do a breakout trade. So there you find that after 2 hours, they stop cutting the high and they gain the levels quickly and they wanted to hold near the high and induce the traders to go in for a buy positions. So that's what happening in the market from time to time. This is referred as the extended move. They rise about 150 pips. And on Friday, you would have noticed that they rise during the European session itself, about 250 pips in the case of GBP. And they have been holding there, and subsequently they did not make any rise. And anybody who has taken a buy position there, they would have suffered a lot. So this is how what is visible in the market is not true. You need to understand that. Okay, with regard to N crosses, one-sided moves last for how many days? So one-sided moves can last for about 1 or 2 days, and if the traders are not changing their direction of trading. Say for example, when USD yen is rising for one day and traders short, and in order to average their shorts, if they take further shorts, and then you will find one-sided move continue for one more day, two more day like that. In the case of yen crosses, it happens very often when the traders think, okay, 145 is very good level to buy, 143 is very good level to buy, then they make further drop and induce the traders to liquidate all their long position. Afterwards, they show 148, 149. What is the use? Because you won't be holding the position. If you use the hedging, then you hedge and keep stop at entry in the hedging. And when the market drops, then you can book profit. By keeping stop at entry in the hedging, you can wait for the market to form the low. And once the low has been formed and beyond that the market is not going down, you can book profit there. Still keep another hedging order below that, 50 pips or 100 pips below that to limit the risk. And subsequently when they rise, you try to book profit in your buy position. Otherwise, do one more averaging of a buy at the lowest level. Close both the buys above that of their average level. So this way you can develop your trading strategy. For that, hedging is very essential. How do you see gold performing? See, gold is a currency, gold is a commodity which is used mainly to create the market sentiments. And you know that it is not a very essential commodity and it is only a fancy commodity, and people think only for investment purpose. When all invest in gold, okay, from them, who is going to buy at the highest level? You have to question that, because we cannot eat gold. And so obviously the financial institutions create a hype, thinking, just explaining to the normal traders that gold is the safest haven and where you can park all your money. Okay, all of us have parked our money there and we wanted our money to grow. How exactly it can grow, you tell me. And there should be some fool who should be in a position to buy above us. And only those who have gone short at the lower level can come for short covering. Afterwards, we will buy. So the financial institutions try to create a hype that it is the safest currency. When US dollar is under risk, why not invest in gold? And when there is a risk appetite, why not you invest in gold? This is how they alternatively give the market sentiments. And you find that many of the currency trading platforms offer gold and crude in the trading platform, in CFD's trading platform, because they wanted more and more traders to speculate in these commodities. And gold is expected to correct next month very nicely, but it can come only up to 900. Then afterwards it will again trade in the range of 1050 to 900. Okay, did you say USD gaining move? Yeah. Today there will be USD gaining move, and next 2 days you will come across more and more volatile moves in the market. Up and down moves. Because the players will not just like that show profit to that of the short sellers. But it is very difficult to do buy and sell trade in the market. This sort of scenarios will prevail during the mid-months. What levels can be expected this week in Euro GBP? Okay, Euro GBP, I was telling that it is going to correct in a very significant way. Many people were questioning that, when, probably after we are all being stopped out at 0.98, it could drop, and that is what that distress condition expressions were seen. But subsequently, you find that Euro GBP has started correcting, and it has come to that level of 0.91. It could be appearing as a support, and you will find in this week it will come to 0.88 and quickly it will come to 0.86 area. So buy and sell trade is very risky. Wait for the quick rise. Whenever they make quick rise and stop cutting the high during the European or the US session, try to take a sell position, you will be benefited. Okay, there are some personal questions. I have GBP short at 1.59. So that has created the sentiment. That is why you had sold it at the lowest level, 1.59. So you have to wait or average the trade. Okay, JD. November is USD gaining moves, so we can see USD CAD and USD CHF back. Yes. November is the USD. November you will come across USD gaining moves in a very significant way. So you will find the denominator currencies USD and USD CHF and USD CAD. They will catch up very nicely. Now you will find that USD CAD showing a net change negative and Australian dollar is showing net change positive. So after handling that of the crosses, they wanted to focus on the majors. They will try to do some sporadic quick moves in the case of GBP and the Euro in order to hit the stops and subsequently correct during the European session. Okay. There are some more questions. Will Euro go as high as 150 pips in this week? Very unlikely. Okay, shedding light on the massive moves. Start from that of. Okay, with regard to massive moves, whenever the traders have committed positions and when they are holding the positions without covering it or without closing it, thinking that they can do a position trade, invariably the traders take a decision like this. Whenever their position becomes adverse, they say that, okay, I am doing position trading. That is not the right approach. You try to take a sell position or a buy position, and once the position makes profit, keep stop at entry. And subsequently, when the profit is growing, then try to do position trade, not when the loss is growing. So in that case, you can use stop at entry and try to maximize the profit by moving the limit away from the market and also try to trail the stop, then you will be able to maximize the profit. That is position trade. So there is no predetermined condition that, okay, I have to do only position trade from here or I have to do only swing trade here. You start with a swing trade. When the going is good, then convert into a position trade. What levels are expected in GBP by month end? See, GBP, the high could be around 1.64, 1.65 maximum, and then it will come again to that of 1.58 to 1.57 area before going further up. So strong dollar strengthening move are not expected until November. So you will come across USD gaining and USD weakening moves alternatively on a daily basis. Okay, market has to make swings and volatile moves, only then the traders will participate. Otherwise, nobody will participate if there is a one-sided rise or one-sided drop. But in less traded currencies, they can make one-sided drop or one-sided moves for about 2-3 days. So, okay, initial low and high act as resistance or support for this session or for the whole day. They act as the highs and the lows, initial highs and lows only. And the players can cut the high and go above that of that as an extended rise, or cut the low and go below that as an extended drop. And they can reverse it. It does not imply anything and it does not act as a support or resistance. They are the levels established by the traders when they are making an upward stop and a downward stop. And when emotional traders try to buy at the highest level and sell at the lowest level, these lows and highs are being set. And the players do not really worry about the levels. The players focus mainly with regard to their trades, and they breach the psychological levels mainly to create the market sentiments, nothing more than that. After creating the market sentiment, everybody turned bullish, then they sell all their positions happily and turn the market other way around, using some news or data release as attribute. Okay, rather good level to short. The gold shorting, whenever there is an upward stop and about 1050, 1060, 1070 areas are all good levels to short. Okay, buying gold as a consumer is something different from that of the gold market. The levels are sustained in the market in order to create the sentiment. for the retailers to buy, but retailers hardly buy a few quantity of gold. It's not in that of the troy ounce, what is being traded. They are all nothing but the positions. The players use it mainly to create the market sentiment, nothing more than that. Will Australian dollar break new high before retracing? No, I doubt very much whether Australian dollar can cut the high set now. Next month is for USD gaining moves. Hence, can I conclude that before the drop in next month, players will be making massive USD weakening moves in order to misguide the traders? So obviously, that is what they have been doing already, and they are holding the high and building sell positions in the market. Okay, these are all the questions. I'll just open up the slide again. So I'll display the forecast slide. Expected market moves. Japanese session swing moves. That's what happening now. They are not cut the high. They are not cut the low, specifically in any currency pairs, especially the majors in the commodity pairs. And swing and drop during the early European session. Then quick up and down moves during the mid-European session till end of European session. Then afterwards swing and slide expected during the US session. These are all the expected moves in the market. So I take this opportunity to thank everybody who have participated here, and see you tomorrow by 5 GMT. You can see the postings in the blog and follow it up from there. I take this opportunity to thank FX Street for recording this and displaying for the visitors, those who are not able to attend the webinar, so that they can leisurely listen to that and understand how exactly the market moves. Thank you one and all.